Hi traders, how are you? Vladimir Ribakov here from Traders Academy Club, and this is a Forex market review for the week starting on 22nd of October 2017. Previous week was amazing. It started very slow, but the second part of the week was just fabulous. Great moves. Some of the pairs just followed the long-term cycle. Some of the pairs changed a bit the cycles, extended a bit higher, and that's exactly what I will want to go over today and see. What can we trade this week? So the first thing we have on the list for this week is the focus around the Japanese pairs. The elections during this weekend there, most likely there will be no surprise, and Abe's will continue to lead. We saw some rallies from the yens on Friday, expecting that to happen. There is a very serious question what's coming next, because if he continues, his policy continues, and that means the weakening. Sorry, and that means weakening the yen. It's one of his favorites actions. Let's say that's what we saw on the previous last Friday, and that's what might continue if the results would be as they expected to happen. And the dollar yen is actually on one of the most interesting conditions here, and I would like to start with that and explain it. So if we take a look on the monthly chart, let's go very deep. Okay, what we had on the monthly chart is basically this straight move, where we can break it into some kind of special here if we really try hard. But the fact is that this is a first move up. There is a very logical situation right now that this pair will try to create some kind of corrective cycle. Now, corrective cycle could be two waves down or a range. And if we take a look here, that there is a good chance that this would start to look like a possible range for a long time here. And that's what makes me think that dollar yen has all the reasons to push again towards the 120. On the same time, it can be all the way to 100 or so to provide us the double wave correction. So the monthly chart and the weekly chart don't really help us here, right? So what do? We go to the next available time frame, and this is the daily chart for us. And here it's pretty obvious that this pair is stuck in the range. And you can see that we have this false break right on the bottom, one false break on the top, another false break on the bottom, making that all that to be a valid range. Now, if we put the cycles here on play, we have the 61.8 to be on the top of the range, which is around 115. The divergence is also developing itself. It's not there yet, but it is developing itself. So from my point of view, there is very serious chance that around this top of the range and the 161.8, we will see the pair running out of the steam. But currently, after breaking of the last highs, we would say, and starting making here kind of a triple cycle, the current momentum is back to bullish. And as long as this low holds, or at least as long as the trend line holds on the short term, the pair might be traded versus that, taking us towards the 115, maybe a bit higher levels, before we can stop and analyze for anything else. Now that's one of the options, of course. If the traders would be disappointed by the elections, the bearish move should begin, and the bearish move, we would be looking for a false break right here on the top, a false break, a lower lows, which is currently this is the last important low here for a convergential principle, and then we will be start looking for the sell. So something like that, basically, boom and sells. That's the idea. The final opportunity here is, of course, triple cycle down on 4-hour or 1-hour chart. 1, 2, 3, 1, 2, breakout, and then we can start looking for sales again. As long as none of these scenarios happen, the current momentum is back to bullish, and this is what we should be looking to go with. And basically, we can see here that the idea here was bearish from previous week. I was looking for sales, and what I wanted to see here is this area as the target. Now we gotta move down in triple, we gotta move up in double. We never managed to recreate lower lows. The trend line here was broken on this short one, and it was fake. Never could manage the momentum to the downside, which makes this scenario as expected from previous week irrelevant, and we have to switch and to update. And once this turned to be a fake breakout here, it's pretty clear that we are going higher. And as for now, as long as none of our invalidations triggered, we are to the upside. Dollar yen, in terms of the statistics, have for us 25, a monster day, 25, 27. It could be that. If we keep rolling that, this is the first actions. On the next one is a bit higher, so we have all the reasons to see that higher, and then will most likely provide us the sell opportunity. So let's see how the elections really affect. We have the buy plan, we have an alternative sell plan if the convergence principle triggers, or we have three waves down and up, 2 waves up correction. It looks good. Next one following is the euro yen, and this one could be a gift or could be a headache. Why? Because this pair, if you take a look on the weekly chart, could take us all the way towards the 138. Sorry, it's a monster zone then that will also recreate this triple cycle, will complete it there, and from there, with this divergence developing, there is huge chance we are going for some big wave down. And basically here on a daily time frame, we can see that we never got triple cycle down yet. On the 4-hour, we never got a triple cycle down. So the only thing we did get here was a double cycle down, and in that case, we never could get a sell yet. In that case, that's what makes it to be a corrective cycle, and there is a great chance it continues higher. So basically, now what happens with the dollar yen? As long as this high holds, theoretically, bears could take control and crush from here easily. For that to happen, we will want to go below the last low, right? Make a fake breakout of the trend line here, lower lows, and then sell rallies. This is what we will want to see. But as long as we don't see that, basically, as long as the new trend line holds and the lows hold, there is a very, very good healthy chance we are going to the 138 zone, where from, if we do, prepare some heavy possible sells. CAD yen, another monster here, and this one has also two views. One, we got a triple cycle on the weekly chart. Now this, those of you who follow me week by week know that scenario. So we got this double, we got the divergence here, we got this double, and we got the divergence here, and it's pretty critical zone of 90, very, very psychological level. On a daily chart, on 4-hour chart, sorry, we got triple cycle down. We got 1, 2, 3, and now we got 1. We might get 2, or alternatively, we are building up a range, which means if this scenario is correct, there is an amazing chance we are building up here for one more push lower. How low? To correct to 38.2 of this daily cycle and the 38.2 of the weekly cycle, which would be 85, 84. But if we do break the high and continue to rally, then remember our 94 zone, and our 94 zone is coming from here, from the expansions, and that would be to the 100 level. That would be to the duplication level of this as well. So classical levels there around the 94 for the buys if they take the control. And I believe many things would be depend now on the elections. So let's see how this one goes. Pound yen, same story. Theoretically, we have all the reasons to get 160 right here, which is the 50% retrace of the special cycle we had here. So 1, range 2. Definitely doable scenario. But on the same time, we did have 2 waves up, divergence 38.2 holding, and on the 4-hour chart, we got 1, 2, 3 waves down, which could be also seen as a special. That's actually more like a 1-hour chart, not 4-hour chart. Now we are rebuilding this correction. The clear thing here, the trend line was not even breaking down. So as long as this trend line holds and we don't have lower lows, the current short-term momentum is bullish. Break below that will reopen the doors for the bearish view, and then we are back to the sell idea, aiming the 38.2 of the big cycle here as a final target. That would be the 142, and the 50% retrace. What is that? What did I do? And 50% retrace of this would be our first target, and that could be 148. So elections, I said, let's see how they impact, how they affect, and if there will be no surprises, there is a good chance that the yen pairs will continue to the upside, which brings me back to the Aussie yen, another pair that has all the reasons to take us a bit higher. How much higher? Let's take a look on the levels. We have this, and of course we have this. So this could be the first zone to play inside, while theoretically we can always go all the way to the upside of 98. Looks like a bit, there is a doubt right now, right? On the 4-hour chart, we got triple cycle down, which we always want to see. 1, 2, 3. And now we get the 1, 2, which is a classical scenario. We want to go below the trend line. We want the move down below the trend line to be in 3 waves. So we have 1, 2, 3, 1, 2, and breakout by itself. And then this is a massive bearish call. If the bearish call comes in play, we are looking for the targets for 38.2 of this double cycle, which brings us to the gap zone, and this is around 87. And then we can expect a full target, which could take us to the 38.2, which would be 85 zone. So that's our levels for the short if they take place. If not, we are going for one more high, 91, 92 first of all, and then good chance for 98. So let's see again how the elections affect on this pair. Now I can continue with all the rest, Swiss yen, New Zealand yen, but they are a bit less attractive. All the pairs I mentioned before are the most attractive ones. Let's go to the majors. So what happens with the majors? Euro dollar still holding its head and shoulders pattern right here. Very powerful resistance. Theoretically, as long as this high holds, we can expect it to go lower to the target of 38 of the daily cycle here. So first of all, 116 again, then 115, which is a bank zone of the euro right here. I can expect it to go down to there, 115, 114. So that's definitely a possibility. The only thing now is the last speech of Yellen on Friday, where she starts to show her concerns about the low CPI. So basically what it says, the chances for further hike of the rates is getting a bit lower. They are trying to maybe just to calm down the expectations, which stand for 90% on the odds for a hike in December. So they try to take these crazy numbers and the expectations lower. And we will see how it goes. Basically, as long as this top holds, the euro is under bearish pressure. Break above that and the trend line. You see how they correlate here? So if we go above the trend and this high, there is a very, very good chance that the euro dollar would start to build itself up again to the slowly to the 124 zone. So let's see how this week starts. I remain bearish in my mind as long as this top holds. That would be our this level would be our invalidation for a bearish view. We would say that. So break above that in trend line and warning signs come in play. Okay. Now let's go to the pound dollar, guys. The pound dollar has for us also, let's say, all possible bearish reasons. Mainly because of the triple cycle from the weekly, which still can take us to the low of 50. Very doable, very possible. And if we go to the 4-hour chart, we got this technical view here. 1, 2, 3, 1, 2, and a breakout. So technically, as long as this top holds, we are in a bearish view, expecting one more leg down. Towards 128, 127 would be ideal. 130 is a psychological level enough to pay attention to. Break above this high could open the doors for the bulls to take the control again. And with a speech of Yelin, it could be a trigger. Now, which brings me to the news this week. And we have some important news. For the pound, it's the main, the prelim GDP. Quarterly 03 is expected. Now, besides that, we have some news in Australia. CPI critical for this pair this week. Trim means CPI. Then we have the cash rate in Australia with the monetary policy to be published. Crude oil investor inventories and press conference from Canada. Rate in Euro with the press conference there, and the GDP in the US. So this week is very, very important in terms of fundamentally, of course, and that could boost up our pairs. So pound dollar bearish while below this top. After that, both scenarios could become in play. We can fly for a new high. We can have a fake false break here and another crash. So basically, for the sells, I believe there are all the reasons for 128, 127. If the bears continue, break above that, and this pair for the long run has all the reasons of 140. First of all, 145, 146 next. Let's see what's about to happen here. My next pair is the cross in between, the euro pound. Now, you know my view. As long as the weekly top holds, I'm looking for sell opportunities. Daily chart gave us this move down. It's actually seen better on the 4-hour chart. We got this cycling, and now we got this. Now this is where the trick comes in, because this was a trend line that, oh sorry, yeah, like that, was broken. So technically, while this high holds, we are looking for sells. Break above this high does not change the view. Break above this high changes only the ABCD, so it will be longer, and then we will need to break below this trend line to get short again. So for me, every rally is a good opportunity to start looking for the sell. I remain bearish in my mind for this pair. Now I want to remind you, for this pair, We were talking about the top to be created here, right? Remember, on this top, around the 12, 13, 14, because of these levels. It's right there. It's right there, and it boosted it up again. The top here was created on 20, 21st, 22nd, have all the reasons to continue to hold as a top. So while this holds, it remains in a bearish view. Scorpio was a great call for us on this to rejoin the cells here. 1, 2, 3 and 4 is our count. I don't count these two as they are inner inside this, so they don't really change my mind here. These are the two. 1, 2, 3, 4. Great candle pattern there, triple engulfing and a kicker with a massive trend from the money flow direction. As long as this top holds and survives, I would be looking only for sells. Break above it, need to be careful. Next one on the list would be, let's talk about the Pacifics, okay? No, you know what? Let's actually go over the other majors first of all, then the Pacifics. Dollar Canadian. Remember our range, guys, was sugar. As a beautiful range allowed us to trade two directions previous week, sell the top, buy the bottom with the trend line breakout. Really, really good. It continues higher. How high it can continue, I think it has all the reasons to 127, maybe even to 128. Sorry, maybe even 129 zone. These are the two. 1, 2. So bullish while this low holds. The first target, second target would be right here, which also go hand by hand with these levels. Now, cash rate this week in Canada, of course, will contribute to the Canadian pairs. So watch this out, guys. Elections in Japan. Cash rate in Canada, CAD yen, could be a monster. So might be the yen pairs, other yen pairs, and the other Canadian pairs. Next one on the list would be the dollar franc, which holds well as for now. The break of the trend line looked like a possible false break here, but it seems holding. I would not be celebrating too fast here because the 50% of this triple cycle is not far away. It's right there. And with the speech of Yellen on last Friday and the last divergence developing, this could be the end of the celebration to the upside. And I would start to be careful here. Careful means while the 4-hour chart low holds, we are bullish. The moment it starts to switch, which means it could start to make false breaks again and lower lows, it's time to be careful. It's time to be careful and consider to switch the direction. So that's for the dollar franc. Euro franc. This one actually surprised me big time because I was bearish while we hold this top. I was clearly wrong here with the break of this trend line. Never survived, never went long. Break above this high, invalidates this plan, and we are going higher. Higher to where? Most likely to anywhere between 116 to 118, where it should be blocked. We had one false break. There's a great chance we are for a second one. So it could do something like that and rebuild the short again. Divergence is still bearish. Breakouts are fake. And after failing once, it might recreate the high, I believe, up to 118, not higher, not much higher. And then we start looking for the sells. As long as we don't have the reasons for sells, which would be a false break or lower lows, or at least three waves down. 1, 2, 3, 1, 2, and another breakout like we have here, right? 1, 2, 3, 1, 2, and breakout. So this scenario failed. The next one, if we'll recreate, could be a big call. So as for now, the pressure is bullish as long as we don't have the retraces signs, as I just mentioned, false breaks and lower lows on the daily or 4-hour chart, or 3 moves down, 2 moves up correction and breakout. Classical starting sign for the reversal cycle. Cat Frank is also a monster, and I think that as long as this stop holds, this pair should theoretically reach the 38.2 or 50. So I remain bearish on the short term as long as this stop holds, only long for the long term. So if we're lucky to get this double cycle, we are looking to big buys. Why? Because of the monthly triple cycle which we got here, 1, 2, 3, which could get us much more to the upside. So for long run, I believe we are going only to the upside. Short run, I wish to get 0.7650 or 0.75 zone, where from we'll switch only to buys, but there is a chance that this low of 0.77 will hold and we're gonna fly again. So let's see how it brings us to that. So just remember this scenario. There is a chance that these two waves will be blocked here on this banking area and fly with the break of the trend line. So that could be the entry for the buy. Okay. What else do we have? An interesting here. That's all from the massive majors. Pound franc. Also, well, I remain bearish in my mind because of this daily cycling we have and the top of the range. It's kind of a triple cycle here. 1, 2, 3. So I believe we need to get one more correction down. That's what we have. 1, 2, 3, 1, 2. The trend line was broken. It might look like a false break. So I would still be looking preferably for possible sells as long as this stop holds, which again would mean a new trend line breakout. Or 3 moves down, 2 up and breakout. As per tops here, we might have 22nd, which the beginning of the week as a top. If not, that means we are going all the way up to the beginning of the next month, and that's the very important sign. If it happens, it has to happen at the beginning of the week. If it doesn't happen at the beginning of the week, remain bullish. There's a good chance we are going higher. How much higher? To the weekly 38.2, which was taken right here, and the 50, which is the next level of 136. Let's continue, guys, to the Pacifics. Aussie dollar. Now this one has very tricky. CPI this week. For long run, I remain only bullish here. Why? Because of the corrective cycle we need to get on the monthly cycle and the fact that we got here a bounce from this trend line after a bullish divergence. So I would believe we are going higher. But on the short term, we had a double cycle here. We got a divergence here. There is not a bad chance that this triple cycle from the daily would give us a second leg down. Okay. Now, if we put the Fibonacci levels, we will discover that 50 was already in play. That makes it very tricky on a daily. We got one false break on the top, one false break on the bottom. So theoretically, as long as this low holds, look for buys. If this low is broken, then we can get into something bigger, probably back to this trend line. How can we look for the buys if it's about to be retaken? Of course, the trend line breakout on the 4-hour chart, or if this trend line develops itself further and we have better two connections and then the upside. As long as this bottom holds. For those of you who want aggressive play and bet on a new low, It's more than doable, more than possible, because that could be a classical divergence there. Then stay short versus the last high, only versus the last high. That could be providing an opportunity as well. But this is aggressive trading because we go against the weekly and daily forces. So that's all. That could still work and work fine. Now I want to show you how the Scorpio could help us here. OZ just changed the 4 hour to the bearish, right? So if we go here and we get ourselves, for example, signal for the sells, that could be a very nice opportunity. Actually, this was a good one. And paying, same with the 1 hour chart. But as long as the 4 hour chart holds its bearish color, right? Because if it will be bullish, like if it will turn to be bullish again, we are back to bullish view. And this was the bullish opportunity before, and we got ourselves the previous buys. It was the 1 hour chart or the 30 minutes. No, it was, where was it? It was 15, I think. Yeah, it was 15, which gave us these 2 waves down and the rally to the upside right there. Now, after switching to the 4 hour chart bearish, we got this. We saw that also on the 30 minutes, providing the sells. So that could for those of you who want the short term, that could be the case. This short term and long term tops and bottoms provide us the opportunity to join the current momentum. And that's why I say those who are aggressive, as long as the 4 hour chart holds the top and don't create a low with a reversal, that might provide continuing sells. But be careful with the CPI this week. It happens on Tuesday, the night between Tuesday to Wednesday, and the expectations are very bullish. Anything below could boost up the sells for the Aussie dollar. Now what could happen here is also a push down by Tuesday and then a fly. So let's see how this one goes. New Zealandian dollar, after the new political changes and challenges with a new taxes plan, the New Zealandian crashes, and it could take us to the bottom of the range, which is 0.68 or even much lower. So this one is very tricky. I would be careful here for 2 reasons. Why? First, we are right on the 100, still relevant. Second, it looks like a triple. Now, don't rush to switch to bullish here. It's completely nonsense, right? But start to pay attention to, because if there will be false breaks created or 3 waves up on the retrace, 1, 2, 3, 1, 2 breakout, that could be end of the bearish move. As long as it didn't happen, of course, we remain in a bearish view, expecting the 0.68, and who knows, maybe all the way for the second leg down to 61.8, which should take us towards the 0.60 zone or slightly lower. Definitely a possibility, especially if we consider the long trend line we have there. Could be very interesting one. Which brings me to the New Zealand pairs, and the star of that is Aussie Kiwi, a pair we have been bullish for a long time, expecting the 113, so it's almost there. Start looking for the cash out reasons for the short term, and long term we still aim the 50% around the 119. So 113, 114, first level of cashing out. We are very close to there. I would start cashing out now, especially considering all the Australian news. And if it continues higher, next one would be 116, just a spike above the top, and then 119. Next fly came from the pound New Zealandian, and this one also we are bullish. We expect at least the level of 2, remember that. Break of this range. Now we have been trading the range, if you remember, and the break of the range happened right here. You should remember this setup from previous week. We said the lower we go, the better. Of course, breaking of the trend line will give us the boost up. We are flying from there already. 1 to 3 risk reward levels. $195 and then 2 and then 210. So stay bullish there as long as we don't have any bearish signs like lower low or 3 waves down. Every retrace still could provide continuation. Euro Kiwi flying further, 170. Actually, this one surprised me because I was looking for sales here on the previous week and that one was completely wrong. I was looking on that 1, 2, and my 1, 2 never broke because this high got invalidated. So game over here for me for the long view, and on the intraday view I was looking for that. On the short-term view, which again did not provide that trendline breakout and just continued rally. So no trigger for the sales, only rallies. How far can that go? According to monthly, we can go all the way again to the 38.2, which is the top of this range. There is a false break on the bottom, false break on the top. There's a good chance we are going higher. So stay long. There is no reasons yet for the short. And as long as this high holds and the trendline holds, this low holds and the trendline holds, the idea now is bullish. And we can go to 170, 172, 174, 177, easy. Too easy. New Zealand and Canadian continues its crash, and this one can take us to the bottom of the weekly range, which could be all the way to 0.85 or lower. So as long as we don't have too many reasons for switching that, which is break of this high or 3 waves up, 2 down. Let me remind you, on the 4-hour chart, 1, 2, 3, 1, 2 breakout. As long as it didn't happen, it is yet bearish. That's for the Pacific pairs. Now Australian might be the star of this week, so keep an eye on this one, guys, with the CPI there. Pound Aussie could be the next pair to pay attention to. Bet CPI here, and we are flying further to the upside. This is our cycle, so 38.2, 182 we want to see. Going to the 4-hour chart, this is the big trend line. Going above it, holding above it would make it bullish versus this invalidation. So if we break above and hold above, buy retraces, this would be the invalidation level for the buy plan. And if the bulls take the control, it can fly and fly big time. All right, let's talk the next things. That's the gold and silver. Only bullish as long as this bottom hold. Break above this bottom would increase the correction to the downside and bring us towards 1240 zone or 12 zone before we fly again. For long term, the plan did not change. Same with silver. As long as we hold below above this area, stay bullish. Break below that and we can see one more spike to the downside before we fly. Every 2 waves we get down, this is a buy opportunity for us. Oil is making what we wanted to see from that, right? We want to see the 54 zone where from bearish action might take control. So I really want to see this one extending to there. This is a monster zone there of these 2 cycle and this 3rd cycle. Oh wow! And this 3rd cycle. So 54 zone, we are coming there. We can start looking for possible sell evidences. Go to the statistics, and what can we see there? That 22nd, the beginning of the week. If not, end of the month, 29 and the beginning of the month 1st would be the bearish reasons for us there. So let's see how this one is developing. Natural gas, while holding the low of the range, remains bullish. I expect only bright future for that for the very long term, of course. Indices, as for now, remain bullish. No changes there. Rumors about the taxes plan from Trump and so on keep boosting that up. No bearish evidences. We are not doing nothing with that yet. Seems too early. So let's see when the evidence will come. I will talk about it on daily basis on the Traders Academy Club, in the live trading rooms. We cover all that day by day. And for those of you from the Traders Academy Club that got the Nike trade we got in, remember guys? We got a beautiful buy right here. It's moving pretty well. It's time to make sure we don't lose money on this one. This would be the first target, 54. But we already moved stop loss to the entry. We don't lose money there. We have more than 1-to-1 risk reward. No reason to lose money. And those who are in the Shake Shack, triple cycle up. Look at this. This was our cycle we traded as a target. Just hit the 50% live now. So the beginning of the week is a great time to cash it out partially. And the long term, well, the long term still to the top of the weekly range, which could be 39. But first, you can already cash out the 50% and enjoy your profit. Move to break even and just enjoy your profit. So once again, all that is covered on the Traders Academy Club live trading room, day by day, week by week. If you are not yet a member of the Traders Academy Club, I invite you to join, and I can very, very, very clearly, transparently say you would never look back. You would never regret. Traders Academy Club is the place for traders. We talk cycles, we talk setups, we talk directions, we talk how to trade and how to trade it correct. If you are not yet a part, I invite you to join and grow with our community to the new highs in trading. So that's all. Thank you very much for your time. It's very, very appreciated. I hope you enjoyed. I enjoyed like every week. This is why I keep doing that. As for your support, I would like to ask you to hit the like button, leave your feedback, some comment, your comments, your feedbacks, my motivation and my team motivation to keep bringing you our materials, our reviews, and our setups, so you can trade and enjoy from that. So once again, thank you for your time, and I wish you a wonderful week to come. I'll see you in the live trading room, Traders Academy Club.